All right, I promise I'm not a boomer who likes 70s music, but it felt like All Time High from Rita Coolidge from the movie Octopussy. It's a James Bond film. It was very appropriate. Fran, why do you think that song was appropriate for the opening of this session?
Because right now, anyone that's ever brought Bitcoin is in profit.
Yes, that's right. If you bought Bitcoin um, 4 months ago when it hit its previous all-time high, you have now made a small profit. And for those of you who bought it before, you're probably very happy. Yeah, it's an exciting day. Obviously, we're here to talk about stable coins, local stable coins, but it's hard to not mention the big kahuna in the blockchain world, which is Bitcoin, which often is a reflection of the overall health and force of the space. And I will say, beyond just the number, that has been reached, I think it's worth noting that the consistency and the level of time that we've seen it now over 100K has made me much more comfortable. I care less about kind of whatever the number is at the top, but I care more about stability, stability, if you will. Sorry for that, but we are here. We are here. This is our third spaces that we've now hosted on a biweekly um, cadence. I've been working with the team at Stabull. Have been learning a lot about stablecoins. I've been really excited about their product, and Fran and team have put together a really great lineup of speakers every session, and this is no different. So, would love to jump into it. Fran, maybe you can just do a quick elevator pitch for Stabull before we get started, in case anyone is listening for the first time and doesn't have as much background, and then we can get some introductions from our guests as well.
Sure, and thanks for hosting as always. So I'm Fran, I'm the core contributor for Stabull Finance. Stabull is really simple. And we've noticed, not noticed, we did some deep research 3 years ago to basically ask the question, what is the most sustainable long-term trend in this whole digital asset space? And really, it's the legacy world is moving on chain, whether it's fiat currencies expressed as stable coins or tokenized gold, real estate, whatever. It's largely moving on chain faster and faster now that the infrastructure and the regulatory landscapes over the last 10 years have, been ironed out to a large extent. So Stabull Finance is an optimized DEX, specifically optimized for stablecoins and RWAs. Been building it out for a couple of years. We just had our TG earlier this week. We've sort of gone through the formal alpha beta testing, done a few million in notional volume, and now we're on the hunt for TVL and partners and have a huge partner and integration roadmap. So in short, there's two things you can do on Stabull. You can enjoy swapping one asset to another with more capital efficiency than regular DEXs. And two, you can dust off your assets and add liquidity to earn interest rates on various assets. I'm particularly excited about, being able to, instead of paying for storing my gold, to actually receive a small interest rates by staking my gold. So yeah, hopefully that gives you a rounded sort of idea of what Stabull is.
Yeah, absolutely. And the last session we had, we did talk a little bit about the importance of local stable coins. I think there's kind of this false assumption by people who are newer to the space that that it's just USD dominance, and that simply isn't the case. And we heard from people on the ground in different jurisdictions, and from Brazil, where people want to use the local currency. And of course, there are a lot of international business dealings that do happen in USD. But nonetheless, when you're talking about just commerce and people working with each other locally, there's massive demand for local stablecoins. So we'll talk a little bit about that. But yeah, let's meet our guests for today. It'd be great to hear from you guys and a little bit about what you're working on, and maybe what you're most excited about. So Nick, maybe we'll start with you.
Awesome. Happy to jump in. Can you hear me okay?
Yeah, you sound great.
Perfect. Well, thanks for having me here. Really appreciate it. We are 1 week out from launching the largest global stablecoin conference in a world where we're swimming in different great crypto and fintech and payments conferences. It blows my mind that stablecoins are such a rich and developed ecosystem, and yet there's not really one dedicated global conference for them. So we're working on building Stablecon coming to New York next week on Thursday, May 29th, with about 1,000 people and about 200 speaking on stage from across the ecosystem. Other than that, you can find me writing This Week in Fintech and investing out of a small venture fund called the Fintech Fund, where we back a lot of stablecoin based and DeFi entrepreneurs. So really excited for the conversation.
Awesome. Yeah. Thank you so much for being here. Santiago, over to you.
Hey, thanks for having me over. So I am the CEO and co-founder of Minteo. We are a local stablecoin issuer for Latin America. So we initially started launching in Colombia. We have COPM out. We're launching soon in Mexico and Brazil. And I think the idea behind Minteo is like we see local stablecoins as financial infrastructure. So the first wave for like stablecoins was like as a store value with like USDT, USDC, and then there's like yield bearing stablecoins where you can like sort of get the equivalent as a bond. And what we see is like as you were saying before, like 97% of people here do transactions in local currencies. And at some point, like we're gonna need stablecoins just for like doing everyday things, tokenization, etc. And that's what we're pretty much enabling people to do at Minteo with like local stables.
That's great. Yeah, and I think you kind of touched on that point that I shared earlier in terms of the demand for for local stablecoin usage, and maybe you can share just kind of from your personal observations or experience, especially in the markets you're focused on, like how are people using stablecoins? Is it paying from from a consumer perspective and maybe from a business perspective, like what are some use cases that you're seeing a lot of?
So obviously, a lot of the initial use cases we're seeing are in terms of like remittances and FX. I think there's already a very widespread adoption usage of like USDT and USDC down here. And it's kind of funny because like it's easier to like swap in and out of stable coins. Like if you want to set up a DeFi pool, you pretty much need a local stable coin. There's no way to do like DeFi using fiat currency versus like USDT. So these are like some very obvious use cases. It's just like for like swapping in and out of the currency. We like to call it like a last mile for Latam. It's just easier to get in and out of stable coins to stable coins than like directly to fiat. But obviously, I think those are like sort of the initial use cases. And down the line, I think we're going to be seeing some more interesting things. And we already have some experiments there, like people who are doing like sort of like on-chain lending, people who are figuring out ways to like actually do payments locally. Because if you think about it right now, like, I mean, money within every country and every bank is pretty much like siloed in. And at the end of the day, stablecoins just allow like money to be like cross borders, cross bank, cross frontiers. I mean, I when people ask me like, why are these things gonna work? And it's like, if you go back to the Bitcoin white paper, which is like a long time ago, it says like a peer-to-peer version of electronic cash, which allows online payments to be sent directly from one party to another. I think that's an awesome vision, but at the end of the day, to execute it, you actually need local stablecoins because 97% of people like are used to paying in their local currencies. And I think that's just like what stablecoins are enabling.
Santiago, I love that you have the Bitcoin white paper committed to memory. It's very impressive.
I only know the first couple of lines.
All good. Yeah. Well, I appreciate that. And sorry, I made a quick mistake with our guest list. So we have Tony Caradonna as well, tuning in as the Oracle free dollar account. So sorry about that, Tony. Would love to introduce you as well. If you could give us a bit of your background and what you're working on as well.
Yeah, thanks so much. So I'm in blockchain since 2014. I was mining Bitcoin on Xboxes because then were no basics back then. Met Vitalik, and I think what got me started heavily was in 2018 where I made the first private digital Swiss franc currency in Switzerland. I had a very intense discussion with the central bank, whether private entities can do that or not, and we can. So pushing the envelope ever since, and I'm very active in the the stablecoin community in Switzerland. There's two Swiss currencies in the Frankencoin community and in the H-Liquidity community on Hedera. Now, the thing that I'm really excited about is, these new Oracle-free concepts of stable coins that are over collateralized, where have a gamified governance, where people can find true prices without oracles. And so the Frankencoin is the Swiss version, the Oracle free dollar is the dollar version, and there is a digital euro version of the same concept that all have the same governance. And just to give one example that has been mentioned before, like in these concepts, you can use tokenized silver or gold as collateral and get yields there. Now, in traditional banking, for tokenized silver, you get a value-to-loan ratio of more or less 20% in these Oracle-free dollar concepts, like Frankencoin or Oracle-free dollar. The silver collateralized tokenized silver can get up to 70 or 80% value-to-loan ratio, and clearly that's interesting. If you think of how currencies, what currencies represented, before the 70s. So I think it's interesting times. And I mean, all-time high Bitcoin, that's one thing, but maybe it's all-time low for the US dollar. So that's where I'm at the moment.
Yeah, I was the party pooper in one of my private group chats today and said pretty much the same thing. Like, very, very exciting, but it's probably actually the dollar is losing value, unfortunately. Which, if you have loans that you owe in dollars, I guess you're in good shape. You can pay it off with your Bitcoin borrows.
You mean like I think it's $7 trillion that needs to be rolled over of the U.S. national debt. So lower dollar is a cheaper refinancing situation, which is
yeah. I've got a mortgage that I owe in US dollars, and maybe I'll pay it off faster now. So that's fun for me and a lot of other people. But quick follow up, Tony. So one of my jobs, I would say one of my roles that I play as a host here, as an advisor, is like to be the naive guy who doesn't know nearly as much about stablecoins as you guys do, and so I can kind of ask the dumb questions, but can you maybe break it down a little bit for people who are newer to this space? This idea of Oracle free dollar, like what does that mean? I guess in kind of more common terms for the average crypto user or someone who's really never dealt with stable coins, just so we can kind of get a more basic understanding for people who are less advanced.
Okay, so I mean, so many things to say. So on-chain stable coins, we want to create a solid value, meaning ideally an on-chain stable coin is fully collateralized or over collateralized. Now, there's different ways to do that. These systems that I'm active in, they are over collateralized. I give an example. That's the easiest way. So I bring an ounce of gold, and market value is maybe 3,300 or 3,500, and I bring this ounce of gold into the system, and I say I want $2,000 for that. So basically, I get 2,000 Oracle free dollars for that. Now I have that, and the system has my gold. Now, what if the market value of gold goes below these $2,000? Then anyone can challenge my position and get the gold and make money because the real market value is below. If the market value is above these $2,000 that I got, they will lose money if they challenge my position. So the system is stable, because if you challenge the position and the market price is above, you lose money. If you challenge the position and the market price is below, then you make money. So the good thing about it, it also creates true pricing. If you know more than the market, you will challenge or not challenge my position, even if the market has a different price, because you're willing to lose some money because you know something will happen. So this creates true pricing. I think that's the most important thing about it. Then there's interesting details. Let's say I bring Tony's unicorn token to the system and I say it's worth $5 trillion. It's not true. There's no interest in that. Like, how can you cope with that? So there's a governance token, and you can veto this Tony's unicorn token. So this creates stability that only collaterals are accepted that have a certain market size, that have a certain liquidity, and that can be used within the system.
And
does that help?
Oh, go ahead. Oh, sorry. Yeah, that definitely helps. And, I think, protecting the buyer, protecting the consumer is really important. I think for a lot of people, their image of currency trading is, I show up at the airport and I pay the massive fee to convert from one thing to another. That's a very antiquated and hopefully dead model very soon. But, if we're offering digital alternatives, blockchain alternatives, obviously, we want to reduce the middleman and the margins that are taken from consumers, right? They just want to switch the exact value of one currency to the exact value of the other without any issues and without having to pay these taxes.
Absolutely. And I mean, Forex is the biggest market of all markets. So if just, a percentage of Forex market will happen on chain, we're very well off. That's one thing. And I mean, there is another thing to think of. It's like, what's the price of capital? If you have a fully collateralized stablecoin, clearly price of capital is high, and fractionalized banking, is more effective in terms of capital, but it also brings more dangers. And that's what we're seeing now. So personally, I really like, fully collateralized or over collateralized stablecoins, and it brings security to the user and even opportunities.
Fran, maybe a question for you. I mean, do you think that Forex as a model is basically destined to die now, or that they will be forced to adopt faster, cheaper alternatives and basically just embrace the fact that they're not going to make the same margins as before?
You're talking about banks, or
well, yeah, I guess like so like the industry and sort of the current stakeholders or leaders in that space.
Well, I mean, banks need to adapt or die. Also, we're living in an overly regulated environment. I think today there's like 70% less banks than there were 20 years ago, because it's more and more difficult for new banking licenses to be issued. The neobanks have been consolidated, or Fintech has been consolidated into some of the largest players who can afford the large compliance overhang and everything else. I mean, we're living in kind of unprecedented times, right? Because we're effectively going through a fourth industrial revolution, and this has great impact on culture and money, with automation, AI, and robotics destined to kind of change the way that everything goes over the next decade. And so when it comes to money in general, I think people are finally starting to wake up to the fact that fiat currencies, which nobody called them fiat currencies until a few years ago, right? Thank you, Bitcoin. People are starting to realize that fiat currencies are inherently inflationary, and it's like a hidden tax, and it doesn't have to be this way. And we used to live in a deflationary world prior to, you could argue, 1971 or 1913, the establishment of the third and what I believe is the final Western Central Bank charter for the US anyway. So the biggest reason that people are enjoying stablecoins is because, have you ever used the SWIFT network for an international wire? It's like, what are you trying to do with your own money? It's 50 questions, and you have to give up your kidney and your firstborn child and a pint of blood just to use your own money. Whereas by comparison, it's like, hey, Santiago, here's that 50 Brazilian real I owe you. Boom, done. Instant peer-to-peer transfer. No complications, very low friction. And then, you can off-ramp it or use that stable coin through a Visa or MasterCard extension or some kind of app, and pay for stuff locally. So the product market fit couldn't be better, and I kind of view all of this as a democratization of central banking to an extent. It's private companies are issuing stable coins, and now it sounds like every state of every federated nation wants to issue their own stable coin, and Google and Amazon and everybody else wants their own stable coin. And when you step back and look at it all, you start to realize this is a democratization of some central bank functionality, and I'm all for progressive decentralization, because it's good, better than the old legacy world. It's centralized and full of friction and problems.
Yeah, well, I've said on previous spaces, I never want to step into a bank again. And I certainly don't ever want to have to answer the question of why am I taking my money or using my money. Just a ridiculous thought, which I hope that our, next generations will never, ever have to hear. And thanks to some of our hard work. So somewhat related, Santiago, thinking about the Colombian market, Latin American stablecoin market, um, what are you seeing in terms of adoption, regulatory challenges? Are there challenges for issuers like Minteo, like when you're dealing with competing USD stablecoins? Would be great to get a little bit of a overview from you.
So that's sort of the two questions. Like one in terms of adoption, I think the more adoption that the USD stablecoins get, the more like local stablecoins you're going to get. At the end of the day, like what we are is massifying adoption just of like blockchain rails. And the more products that are sort of built on these things, the more like the technology is widespread. I think the more we'll actually need to use local stablecoins. They're not products that compete with each other. They're actually complementary. And I also think people are going to start like realizing that like down the line, like even governments, like okay, the more like we have like dollar stablecoins, the more we actually need local stablecoins to sort of like remain competitive as currencies. And then I think in terms of regulation, it's this is like very new for regulators. I mean, regulators have like been struggling for the last probably like 10 years, like figuring out like, okay, how do we regulate like Bitcoin, and then how do we regulate Ethereum, and this is kind of tricky because like initially like for regulators, it's like is this like a security? Is this like a deposit? Like what sort of like kind of asset does it resemble from the existing like financial assets which we already have? And they're like trying to like create a framework and wrap their brains around there, and then stable coins come out and just like sort of like different from everything before. Like it's not really the same as Ethereum, it's not really the same as Bitcoin. So you pretty much need like an entire new framework for this, where like it resembles like fiat money, but it's not fiat money. It has like also some resemblance to cash. But what I do see, and like I fortunately have gotten to speak to a couple of like local regulators. I think the Genius Act in the US is actually like getting the conversation locally to move along very quickly. Regulation in Latin America, especially around things in finance, tends to very closely mirror like US regulation. At the end of the day, like for most of these countries, like the US is the biggest trading partner. And whatever gets like massively adopted in the US is also what's going to get massively adopted in actually most of the world, to be honest. So I think if there's like something that's like makes sense, it's logical, like it drives adoption of stablecoins and gives us a framework which we can use them at. I think pretty much like most of the countries in the world are just gonna follow suit and do the same thing. That's pretty much my view. I mean, there might be one or two which has like we're definitely not like this thing, but it's just like it's so obviously better technology than what we have before. Like I mean, going back to like the example of Swift, like whoever has used Swift like knows that's like probably the worst piece of technology like ever. This is like 100 times better, so like it's very hard to like fight it. It's just a matter of like how do you regulate it, and I think that it's a very positive conversation right now.
It's funny how basic stablecoins are as an innovation. It's something that if you told somebody who didn't have any familiarity with financial services, they think, well, this isn't groundbreaking. You're just using it to pay one-to-one the way that you use a dollar. But it really is transformative for so many users. And Santiago is making me think of the first stablecoin company that we ever invested in. This is 4 or 5 years ago. We got connected to founders who were building a company called Let's Bit in Argentina. And at the time when they started building it, it was the largest crypto exchange in Argentina, and they were expanding into Peru and Colombia. But when they looked at all of their users, they realized half of their users were just creating accounts with the exchange and buying and holding USDC. And they weren't doing any trading. They weren't doing anything with the USDC. They were just holding it on the exchange. And so when they started surveying them, the user said, look, the Argentine peso is just too volatile for us. We're paid in peso. We hold our savings in the bank, but what you can buy with that changes on a week-to-week basis. We just want to hold USDC because we know that our purchasing power is going to be the same week over week. And it's such a simple innovation, but it just shows how much opportunity there is to continually fix this broken financial system, not just in the US, but internationally. And I feel like even when you're thinking about stablecoins, we have Frankencoin, we have the USDC, we have EURC for euro-denominated stables. I think we're just kind of recreating what already exists in the world by having fiat-backed stables. But really, if you think about like what the optimal user experience is to pay for something, if you think about what Satoshi wanted when he wrote the white paper, 2 decades ago, it's just I want to be able to pay you and know to me how much value it is that I'm giving to you in exchange for what I'm buying. And it doesn't really need to be denominated in any one currency necessarily. Maybe I think in dollars and the person on the other side of that transaction thinks in euros or thinks in pesos or thinks in another currency. But for me, I shouldn't be concerned about the rail. I shouldn't be thinking at all about FX. I shouldn't be thinking at all about what currency this is being settled in on both sides of the transactions. Like all I care about is, hey, I know this. I know what the hit is going to be to my bank account when I pay for something, and I know that it's going to be one click, one tap in order to make that payment. And so if we can abstract away everything else on the back end through stablecoins, I think that's a huge win, and that's something that has never happened in human history to date. Is that you just no longer have to really think about anything related to the purchase transaction.
Yeah, I mean that's the ideal, and we're talking about the idea of stable coins. I could see a future where that isn't necessarily a common consumer term, right? That's not necessarily like when people pay each other through Venmo, PayPal. They don't necessarily ever care about the rails or the technology. So perhaps that is just maybe it's not like a branding issue. People don't necessarily even need to care. They need just to see it integrated into companies and technologies that they're familiar with. So, to that point, the last time we were on a space, we talked about the larger fintechs like Stripe and Visa, MasterCard, Circle, releasing payment products. And Nick, I believe, some of these large players are going to be speaking at Stablecon. So does it feel like to you that there was just a very rapid shift in sentiment and aggressiveness to get into this space? And what do you think caused that? And then also, what do you think the next 6 to 12 months is going to look like as these guys are all competing with each other?
I mean, that's a great question. And let me give you, I'll give you two answers. I'll give you the cynical answer and I'll give you the optimistic answer. I think
This space was downloaded via spacesdown.com. Visit to download your spaces today.
You've seen this for the past two crypto cycles, and there's always a little bit of innovation theater from TradFi and from financial services when there's a new crypto cycle where everybody wants to be able to go on their quarterly earnings call and say, we're working on blockchain, we're working on NFTs, we're working on DeFi, we're working on stablecoins now. And it happens every single cycle, and we see this. But there are some real bank projects that are coming out of this. JP Morgan just settled on a public blockchain for the first time outside of their Onyx walled garden. And so it's exciting to see that. And I think, even more this cycle is that we're actually seeing in the US a receptive regulatory environment. The Genius bill is in front of the Senate, the Stables bill is in front of the House of Representatives right now. And people on both sides of the aisle are voting to push through real stablecoin legislation. I mean, we could not have sat here in May 2024 and been talking about the chances that there's going to be legislation saying we're building crypto financial rails for the US. And I think that is material, and that's really a huge sea change this year, because there's a lot of things that waterfall from that. Stablecoins, some people say like this is kind of the first like quote unquote killer app for crypto, because this is an instance of crypto and decentralized systems that can be used outside of the crypto ecosystem, and that's kind of mass market for consumers. But I think you see a lot waterfall from that. If people are starting to use stablecoins more and more, it makes it easier for them to then invest in RWA tokenized funds, or to start tokenizing other illiquid assets that have been really difficult to trade in before and really difficult to fractionalize. And it just brings more and more people on chain in a way that I think creates more opportunities in DeFi, more opportunities in crypto. Even this kind of upward price movement for people who are just buying and holding Bitcoin. And so that to me is a lot more exciting. I think the kind of spark here was that Stripe, which is probably the most well-respected fintech company and has built a lot of really foundational infrastructure for the space, acquired Bridge, which at the time was a relatively little-known stablecoin platform back in October for $1 billion. And Bridge was still very early in their journey. If you looked at the financials and the revenues that they had at the time, it wouldn't have immediately suggested $1 billion outcome. And so the question is, why did Stripe think that it was worth 1.1 billion? And then if you see what Stripe launched 2 weeks ago at Stripe Sessions, it's pay and collect in 100 different countries using stablecoins, be able to settle immediately across borders without waiting for corresponding banking networks. There's just so much potential here. And so I think what we're really going to see now in financial services is companies saying, hey, we're not going to change our Twitter PFPs to laser eyes, but we are going to start helping our customers, like especially like large businesses that send millions of dollars across borders every single day, to settle in real time and to be able to track their payments without it just kind of going into the ether, and to avoid having to deal with Swift. And so now I think for the first time, the thing that's really different about this cycle is you have TradFi saying, hey, there's real use cases here. We're not just doing this to pump our own equity. We're not just doing this to put out press releases. Like, we can actually lower costs for our customers. We can actually improve the quality of financial rails that we're using. And that's exciting to me.
I mean, it's very exciting for us to be in a place where most people are not, holding their cash in a bank, which is actually charging them fees to do that, and instead they're holding their dollars or whatever their currency is and earning interest. Like, the idea of actually holding cash in your wallet, so to speak, and not making something off of it constantly is an insane idea to us. And it's not an insane idea to most people in the world, and it needs to be. Like, you are actually losing money every second that you just hold cash, unless there's a dramatic change in how money printing goes. But I would say at the moment we would all agree this is true. So yeah, appreciate that perspective. And you mentioned with Stablecon, like, there hasn't been necessarily a lot of places for people to get together to talk about this technology, even though it is likely going to be the most the widest use case for blockchain. So appreciate that you're gathering smart folks in the same place and pulling people together and raising awareness of that. Yeah, Tony, over to you.
Yeah, just one more thing. I mean, there's so many use cases. Like we're like most probably sitting in a Western world, and payment is not such a big thing. But I also have a gaming company, and we're very active in a cricket Web3 game. Now imagine this future use case. Like, you have a global community of passionate cricket gamers. They have a Web2 experience, and they'll be able to use their in-game assets to swap them or use them as collateral for a currency, and they can send them home as remittance. Now, imagine a use case where basically it could be in the interest of that government that they can get tax on it, and so everybody wins. The people who send the remittance, because they pay less than if they use Western Union or any other thing. The government is happy because they got the tax on it. Everything is green, and the only thing that is not happy is the intermediary, but that's the one that we want to get rid of anyway. So this project Six Cricket is massive, and also the cricket community is massive. And if we manage to get a Web2 experience for these use cases, I think we can think of completely new payment trails, and we need stables for that. We need marketplaces that are dedicated to forex, like Stabull and stuff like that. And we need the conferences where these thinkers of new infrastructures and business cases can meet and connect.
Yeah, so I mean, I guess follow up and maybe open for everyone to chime in on. There will be, a few players that dominate the stablecoin space in terms of the currency that is used. For local stablecoins, it seems like local incentives, and that could be local geographically or local to a specific type of network, state, or online community, are going to be key, right? So like incentives to hold your currency in X local stablecoin instead of say USD will yield more. But are there interesting use cases or incentives that you guys have seen that people are experimenting with that will drive that? Because I think I think there is the obvious, people are used to a certain local currency and they will just use it because it's the default one. But why might somebody from Nevada or Florida hold some money in a local currency that isn't in the U.S.? Like, what are some of those things that you've seen? Hopefully that question makes sense.
Perhaps that one, Santiago can begin with.
Okay. So I think that's kind of a funny question because like I mean I think for some people it might make sense to get exposure to like other kinds of currencies. And it's kind of funny because if you see like the fluctuation from like the Mexican or the Colombian peso versus the dollar, it's pretty much like Dogecoin to the dollar. So you could actually like trade there and get a lot of interesting things. More than the yield itself in the currency, which might be interesting, I think, for somebody in the US. I think a lot of these, so our local currencies are not really like reserve currencies. I mean, and that's a funny term because like most of you guys probably live in the US or like or Europe. So like people are like, we think of like dollar and the euro as strong currencies. They're like currencies for like preserving value. Even if you don't have them invested in bonds, you're still like preserving value compared to like other currencies throughout the world. And it's kind of funny, but then for the rest of the world, like pretty much every local economy operates on local coins. So I think most of the users for this are not going to be like, I honestly haven't seen it. Like, I don't think it's going to be like, I don't know, Joe in the US, like buying Mexican pesos for Brazilian reais. I don't think that's as interesting now. And I think there's probably like, there could be an opportunity for like arbitrage or like making some money on spreads, etc. But I think most of the use cases we see are like for local financial infrastructure. I just like guys moving money locally, people who want to buy things, who want to like have a more efficient like financial system, which is what's pretty much about. When we actually launched, we thought like it might be interesting for some people to have exposure to like international currencies. But to be honest, that's something where we haven't found a lot of interest yet. I mean, and the other the people who also like have access to like crypto right now, they would rather have exposure to like Bitcoin or like the dollar or some other form of currency. But then if you actually live like in Brazil and you have to pay your mortgage in Brazil, and everything is pretty much denominated in your local currency, like it makes a lot of sense to have local stable coins because at the end of the day, like even if you think Bitcoin is going to be worth like, I don't know, 10 times more like 10 years out, what if it isn't next year? What if Bitcoin is like back again at like 50,000 and you still have to pay your mortgage in reais? I mean, you pretty much have to have like local currencies. So I think that's sort of like, I don't know if that's a good answer to the question.
I think
Yeah, well, I mean, oh, go ahead, Fran.
I was just going to chime in and say I think adoption is predominantly from the convenience factor, right? It's just the banks, SWIFT, etc., is slow compared to self-custody or a neobank that's integrated a local currency stablecoin. And on the
I think one interesting way to see it, and like, so if you think like fintech was this huge thing like 10 years ago, and before fintech, we like people pretty much just use banks, and then like fintech became huge. And if you think about what enabled fintech was pretty much like you could get like things on mobile, and then you had like massive adoption of APIs, and then you have like some better consumer experiences. And you think like Robinhood is basically like just like an app for like doing what you could do like with trading. If you think Venmo, it's just like a mobile bank. If you think of Stripe, it's just a better API. If you think of Plaid, it's just a better API for like all these things. And pretty much all the innovation in fintech was a result of like massive mobile adoption and API developer adoption. But it sort of feels like fintech like hit like the ceiling a couple of years ago, like because you don't really see a lot of more innovation in fintech. But then at the end of the day, like the rails, like the fundamental rails, the rails never fundamentally changed. I mean, we're still using like the same SAP database, the same Oracle. Like at the end of the day, like the underlying rails for all these things are the same. We just pretty much like put like nice APIs on top of them and made them mobile. And I think with like cutting edge blockchains, sort of like this like very fast layer twos and layer ones like Solana, Polygon, etc. And then with stable coins, you can actually change the underlying rails for a lot of these financial products, and then you get actual like financial innovation again. We like to refer to this like at Minteo as like the FinChain. And we feel like a lot of the companies that are building on local stablecoins are like FinChain companies. So these are like fintech companies that are trying to like solve problems which they couldn't solve with like fintech technology, but which they can solve with like stablecoins on public blockchains. And I think that's where a lot of the innovation is. It's just like a lot of these FinChain companies.
Follow up for Nick. This might be a hard question to answer, but you have exposure, visibility to so many players in the stablecoin market. So outside of the US, I mean, are there any countries or regions that you feel are pulling ahead, are starting to win in whatever in whatever definition of win you think makes the most sense? But are there any sort of highlights that you're seeing that maybe other countries or regions should be looking at?
I love hard questions. It's a good one. I think where you're already seeing the biggest impact is countries where the delta between what crypto is able to offer and what financial services currently offer is the greatest. And so there's so many use cases that we're talking about here. Like you mentioned, earning interest, but just basic savings, payments. When you don't have a banking system that really caters to mass market, you just have so much more opportunity for crypto to come in and provide this through stable coins. And Nubank in Brazil is a great example of doing this with the TradFi and neobank approach, a decade ago, where you had kind of consolidation in the banking sector. Banks really chased high net worth clients, large clients who could hold a lot of assets with them, but nobody cared about going to 90% of the country's consumers and saying, hey, we're going to give you credit, we're going to give you payments, we're going to give you savings. And so I think you've seen kind of a perfect storm across LATAM right now, particularly in Mexico, in Brazil, and Argentina, and Colombia, where you have people who, one, participate heavily in remittances. A lot of people move across borders to work and they send money back home, or they buy products from outside of their country and they pay for it with local payment systems. You have people who are well off enough that they can sign up for crypto products and that they have mobile phone penetration and that they could use digital services. You have a big enough tech ecosystem in Mexico City and Sao Paulo where you have a lot of people who are really tech forward, who work in the tech industry and who want to use digital products over having to, take a physical paycheck to a bank every 2 weeks and deposit it in person at a branch office. And so, I think that those countries kind of have the perfect storm of conditions where it's like remittances, a very unresponsive TradFi ecosystem, and a lot of tech familiarity that are creating kind of the perfect grounds for stablecoins. It's interesting because stablecoins are they're a crypto product, but I think the biggest opportunity for them is outside of the US and outside of Europe, which are the two bigger ecosystems in terms of where the wallet addresses are based and overall holders. But you're also seeing innovation outside of Lagos, Nigeria, from Nairobi in Kenya, from Singapore, and now that the Indian Supreme Court is kind of backing off their bearish stance in crypto, you'll probably see a lot of interesting stablecoin innovation in India too. One of the biggest remittances corridors in the world between the US and India. So I'm pretty excited for emerging markets, even more so than I am for the US, because of how much potential there is to just leapfrog having to build bank distribution at all with a fully digital financial services ecosystem. And the last thing I'll say is, interesting side note here, one of the first cities in the world to ever really adopt digital payments was Mogadishu in Somalia. This is not a country that has a lot of education penetration when it comes to people who understand how to work with digital tools. It's not a country that has high mobile penetration. It's not a country that's really targeted routinely by tech companies with tech products. And so, one of the questions is why 20 years ago was mobile penetration for payments so high in Mogadishu? It's because you had a lot of people who were merchants and they were buying and selling goods and taking money back from markets that they were selling in Mogadishu to their homes at the periphery of the city or outside of the city. And there was a high instance of people getting robbed or getting held up and people taking their cash. And so merchants immediately switched over to mobile payments when that became an option. And it was easy for them to safely and securely buy and sell goods, to bring goods to market from outside of the city without any concern that they would be getting robbed, which is a crazy story when you think about kind of how much of the tech narrative is predicated on Silicon Valley innovation. And I think that there are so many of these use cases that we haven't even begun to uncover yet in different cities and different countries around the world, where 2 years from now we'll be sitting here and saying, oh yeah, of course it makes sense that 70% of mortgages in Bangladesh are now originated on chain, because this is a broken system, but we just didn't really have line of sight into how bad it was until an entrepreneur came around and changed it by building a better product. And so I'm really excited to have this conversation, again in 2 years and 4 years, and say, wow, there's so many interesting use cases of financial services moving on chain that we couldn't have even anticipated.
Yeah, no, same here. I mean, I think it's advanced so quickly in the last 12 months even. And so by 2026, 27, it'll be entirely different. And hopefully we've evolved even further. I saw we got a question from the audience. Sadiq, I see from your bio, you work in the global payments, industry as well. So would love to hear either a question for, one of the members of the panel, or if you have some thoughts you wanted to share, go for it.
All right. Thank you so much. I actually wanted to add to what Mr. Nick was saying. Building Blockro, and I think emerging markets would need stablecoins a lot, and stablecoins are thriving in emerging markets. Let's take, for instance, Sub-Saharan Africa. We have the highest rate of fees when it comes to cross-border payments or remittance. An average fee for like sending $200 would take about 8% of that money when you're sending money from, let's say, from the United States to Nigeria, for instance. And we also have very high volatility when it comes to our currencies. Let's take, for instance, the inflation rate in Nigeria is currently over 20%. It is about 30% actually. So you see, these challenges make a lot of Africans, especially sub-Saharan Africans, look for a more stable currency and a better way to either save their money or a better way to accept payments. And we've seen a lot of adoption in stablecoins, although it is not super huge, but we've seen a lot of adoption in stablecoins activities. In the last 12 months, around July of 2023 to July of 2024, over $20 billion was in stablecoins was transacted in Nigeria alone. And in Sub-Saharan Africa, according to chain analysis, that was about 43% of all crypto activities during that period. So we see that although in volume, it looks really small, but if we are to compare this to, adoption, we can see that as Nigeria and other sub-Saharan African countries are really adopting stablecoins for payments and other financial activities. Yeah.
Yeah, I appreciate the perspective. I don't know, Tony or Santiago, if you guys have any follow-ups or want to chime in on that, but we can move to the next topic if not.
Look, I'll chime in there just super quickly. I moved to El Salvador 2 years ago. They got off the colon on their own currency and adopted the US dollar. But every fortnight, the banks are just packed on a Friday with people cashing in their checks. It's still quite archaic, very much, traditional bank kind of culture. Now, I would love to see a neobank app allowing for instant transfer of payments using a USD stablecoin here to replace it. But just for perspective, there's kind of like a cartel of banks here, Panamanian, Guatemalan, and other banks operating here. And they're doing their darndest to make sure that there was a very large company that started offering 4% loans for financing construction, property development. And basically they were told you cannot offer loans less than 8% because you'll kill the regional banks. So that's just a variable and a factor to kind of adoption of stablecoins in some emerging markets where the legacy incumbents are still quite powerful in their ability to block innovation to some extent.
So Brett, just to be clear, are you saying basically people are getting like a paycheck on Friday in the local currency, which I guess in El Salvador would be the dollar, and then they are immediately taking it and trying to convert it to, like, say, a stable coin, or what's actually happening? I mean, and are they being charged the 8% as you're implying?
So it's they use the US dollar, and it's a very cash-driven economy, and they'll go and get paid on a Friday, and then they'll go to the bank to instruct them what payments they want to make because they don't have online banking or they don't want to use online banking, or they're just withdrawing cash to use for the next fortnight. This can all be done through an app, online, preferably with stablecoins directly integrated. But the banks won't integrate stablecoins. They're doing their best to just not go web free.
Got it. Wow.
I mean, the point is, the solutions are here now. Now there's different aspects of it, like jurisdictional integrity, the convenience. It should be a Web2 convenience, and then what do you trust as a consumer? Like what brand do you trust? What I can share is like our experiences in Switzerland is like we organized as a community. We created the Swiss Blockchain Federation. We educated a decision maker in politics, and basically we made sure there is a vote on it. And that helped, to get clear rules and enable entrepreneurs to be active in the space and, to know what can we do, what can we not do. And I think, education of decision makers is super important. Then it has to be a Web2 experience. Personally, I'm all into the thing is like, we're not going to change, boomers like us. We have to change the next generation. So kids and trends, and they like what they are doing is that they're playing games. They value the digital assets they have, even if it's sneakers. Their digital sneakers are worth way more than the real sneakers. So we have to onboard the next generation. I think it's super interesting to look into gaming. But again, to summarize it, education of decision makers, the Web2 experience, and create an ecosystem where actors actually can act is the way to success.
Amazing. Well, we're getting to the end of the hour, so definitely wanted to give everyone time on the panel to share what they're working on, or if they want to highlight anything that is coming up. Maybe we start with you, Nick. Obviously, Stablecon is coming. Would love to hear how people can participate both in person or online if they're not able to attend.
Yeah, definitely. It's around the corner. We will be in person next week in New York on Thursday, May 29th. If you can't make it to the conference, there are a ton of side events as well, happy hours, panels, networking events. We'd love to have you at any and all of them. You can find us online at stablecon.com. It's stablecoin without the I, STABLECON.com. And we have a Telegram group. We have a WhatsApp group. We're just going to continue building the stablecoin community around the conference. So hope to see all you there.
Nick, that's a really good domain that you got.
I hope to see you all there. Man, I wish I could talk.
I hope you didn't have to pay a lot for the .com.
We did.
Oh,
we did.
Sorry, but it's a good one. Santiago, over to you.
So I think the next thing which we're rolling out is like we initially launched obviously in Colombia. We are like growing to the rest of Latin America. We are going to be rolling out API capabilities for like minting, redeeming, sending payouts and payments for pretty much all of Latam within the next couple of quarters, which is very exciting for us. Obviously, I think our vision is like we want to be a last mile API for Latin America, so that pretty much any company anywhere in the world can like seamlessly get access to local currencies, do payments, move money from one place to another. I think that's how we actually like build out Satoshi's vision by actually making like this thing like really cross-border. If anybody wants to check us out, you can go on Minteo.com. You can DM me through Twitter. Happy to see how we can help you guys.
I like that last mile analogy. That's really good. Tony, anything you want to point people towards, or for people to try out, where they can follow you, all that stuff?
Yeah, basically two things. The company that I own, we will try to make it happen and have a Swiss currency on stable position. So that's it's not through all the internal governance process, but that's what we're trying to make happen with the Frankencoin on stable. And the other thing really is try to get your head around these Oracle free systems, because I think Oracles are still a bit of a challenge. And the last and also super important point, we will have stablecoin rails in a global cricket game, and I'm super excited about that. That will not be before October, November, but stay tuned for that. I'm sure this is going to be super amazing.
Love it, and I love the Frankencoin branding. It's really cool. It was a good choice. Amazing. Well, Nick, Santiago, Tony, thank you guys for being such great guests. This hour flew by really quickly. Fran, maybe you can just close us out and talk a little bit about the latest and greatest with Stabull.
Yeah, I mean, look, firstly, I think the future's bright. The narrative is there. The world runs on optics and narratives. Everyone's talking about stable coins, real world assets. Stable.finance is, the bedrock infrastructure. We're now focused on adding more coins. We'd love to see everybody here that is an issuer some liquidity and assets so that they can easily procure or swap or use everybody's products in a decentralized self-custodial way. We're just about done with a base integration. That should be just around the corner, and then we'll be able to activate the base community and let them know that stable coins on base are available as pools. We've just relaunched the liquidity mining program. The interest rates are like ridiculously high only because of the level of liquidity. Those will compress down to sensible levels. So early bird gets the worm if anybody wants to stake stable coins on Stabull.finance. But yeah, we're just going to go level by level, integration by integration, pool by pool, chain by chain. And it's a very kind of clear roadmap, which is always nice to have.
Absolutely. Well, thank you, Fran, for co-hosting with me. Thanks, everybody, for listening live, as well as everyone who listens in the future. I know the Stabull team has been cutting up these spaces and sharing audio and clips for easy consumption. So thank you so much for participating. This is our third session. We'll have another one in roughly 2 weeks or so, and we'll continue them through the summer. And everyone have a wonderful rest of your day and week, and we'll be back soon.
Thanks so much.